A fall from grace Nike's recent struggles. Nike, the global sportswear giant, is facing a challenging chapter in its storied history. The iconic brand, known for its innovative products and marketing prowess, finds itself grappling with declining sales and increased competition. The company's recent performance has raised concerns among investors and industry analysts, leading to questions about its ability to maintain its dominant market position. This is a critical juncture for Nike. The company needs to address its challenges head-on and adapt to the evolving market dynamics to regain its footing. The stakes are high, and the world is watching to see if Nike can recapture its former glory. Numbers don't lie. Declining sales and stock performance. Nike's recent financial results paint a stark picture of the challenges it faces. The company has reported declining sales for several consecutive quarters, a worrying sign for a brand accustomed to consistent growth. In the most recent quarter, sales dropped by 8%, a significant decline that sent shockwaves through the company and the market. This sales slump has had a ripple effect on Nike's stock performance. The company's share price has plummeted by 20% in recent months, wiping out billions of dollars in market value. Investors are clearly concerned about Nike's future prospects, and the company needs to take decisive action to restore confidence. These financial indicators are a wake-up call for Nike. The company can no longer rely on its past successes and must adapt to the changing market landscape to regain its financial footing. The competition heats up as the sportswear industry witnesses a dynamic shift. New players and familiar faces are making their mark. The sportswear market has become increasingly competitive in recent years, with new players emerging and established brands upping their game. This surge in competition is driven by innovation, consumer demand, and the quest for market share. This increased competition is putting pressure on Nike, which can no longer take its market dominance for granted. The brand must continuously evolve to stay ahead. New entrants, particularly in the running shoe market, have gained traction with innovative products and targeted marketing campaigns. These newcomers are not just participating, they are setting new standards. Brands like Hoka and On Running have seen their sales surge, capturing market share from established players like Nike. Their focus on comfort and performance has resonated well with consumers. Meanwhile, traditional rivals like Adidas and Asics are also challenging Nike's supremacy. These brands have a long history and loyal customer base, making them formidable competitors. These brands have been investing heavily in product development and marketing, and they are reaping the rewards with increased sales and market share. Their strategies are paying off, and the competition is fiercer than ever. Nike faces a two-pronged challenge, fending off competition from both new and established players. The landscape is evolving rapidly, and Nike must stay agile. The company needs to innovate and adapt to maintain its position in this increasingly crowded market. Continuous innovation, strategic marketing, and understanding consumer needs will be key to their success. Missteps on the digital track. Nike's strategic errors. Nike's recent struggles can be partly attributed to strategic missteps, particularly in its digital strategy. The company, known for its innovative marketing and strong brand presence, has faced unexpected hurdles. The company's aggressive push into direct-to-consumer sales, while initially successful, has faced challenges in recent times. This strategy was designed to cut out the middleman and connect directly with consumers. The direct-to-consumer model, which involves selling directly to consumers through the company's own website and stores, was meant to increase profit margins and give Nike greater control over its brand and customer relationships. However, this shift has not been without its complications. The shift to direct-to-consumer has led to inventory issues and strained relationships with retail partners. Retailers who once heavily promoted Nike products now find themselves sidelined. Nike's over-reliance on digital channels has also made it more vulnerable to changes in consumer behavior. The digital landscape is ever-evolving, and consumer preferences can shift rapidly. As the world emerged from the pandemic, consumers returned to physical stores, leaving Nike with excess inventory and a decline in online sales. This sudden shift caught the company off guard. These strategic errors have exposed vulnerabilities in Nike's business model and highlighted the need for a more balanced approach that combines digital and physical channels. Moving forward, Nike must reassess its strategies to adapt to the changing market dynamics and consumer preferences. The COVID effect, changing consumer behavior and market shifts. The COVID-19 pandemic had a profound impact on the retail industry, including the sportswear market. As physical stores shuttered, the entire landscape of consumer behavior began to shift dramatically. Lockdowns and social distancing measures led to a surge in online shopping as consumers turned to digital channels for their shopping needs. This shift was not just a temporary change but marked a significant transformation in how people shop. While this initially benefited Nike as the company was well positioned for the shift to online shopping, it also accelerated the need for a robust omnichannel strategy. Nike had to ensure that their online and offline experiences were seamlessly integrated. The pandemic highlighted the importance of a seamless shopping experience across both digital and physical channels. Consumers now expect to have the flexibility to shop in a way that suits their lifestyle, whether it's online, in-store, or a combination of both. Moreover, the pandemic led to changes in consumer behavior and preferences. People began to prioritize health and wellness more than ever before, leading to a rise in home workouts and fitness routines. With gyms closed and people confined to their homes, there was a surge in demand for comfortable and versatile sportswear that could be worn for both workouts and everyday activities. This shift in demand required brands like Nike to innovate and adapt quickly. Nike needs to adapt to these changing consumer preferences and market dynamics to regain its footing in a post-pandemic world. This means not only focusing on product innovation, but also ensuring that their marketing strategies resonate with the new consumer mindset. A change at the helm. Elliott Hill takes charge. In a bid to turn its fortunes around, Nike appointed Elliott Hill as its new CEO. Hill, a seasoned executive with over 3 decades of experience at Nike, brings a deep understanding of the company's operations and the challenges it faces. Hill's appointment has been met with cautious optimism. He is seen as a safe pair of hands who can steady the ship and guide Nike through this turbulent period. His experience in various roles within the company, including sales, marketing, and operations, gives him a holistic perspective on the business. Hill's immediate priority is to address the company's declining sales and inventory issues. He will also need to navigate the competitive landscape and adapt to the changing consumer behavior brought about by the pandemic. Back to basics. Hill's plan for Nike's revival. Hill's plan for Nike's revival centers around a back-to-basics approach, focusing on the company's core strengths, product innovation, and storytelling. He believes that by refocusing on these areas, Nike can regain its competitive edge and reconnect with consumers. Hill has outlined a 3-pronged strategy. First, product innovation, investing in research and development to create innovative products that meet the evolving needs of athletes and consumers. Second, storytelling, leveraging Nike's rich heritage and brand storytelling capabilities to create emotional connections with consumers. And third, operational excellence, improving operational efficiency to reduce costs and enhance profitability. Hill's strategy is a long-term vision for Nike's future. It acknowledges the challenges the company faces while reaffirming its commitment to innovation and consumer centricity. The road ahead. Can Nike recapture its dominance? The road ahead for Nike is fraught with challenges, but the company has a number of factors working in its favor. Nike's strong brand recognition, global reach, and financial resources give it a significant advantage over many of its competitors. Moreover, Hill's leadership and strategic vision provide a roadmap for Nike's recovery. The company's focus on product innovation, storytelling, and operational excellence is a sound strategy that has the potential to deliver results. However, Nike cannot afford to rest on its laurels. The company needs to execute its strategy effectively and adapt to the ever-changing market dynamics to regain its dominant position. Nike's current struggles represent a defining moment for the iconic brand. The company is at a crossroads, and its actions in the coming months and years will determine its future. If Nike can successfully navigate these challenges, it has the potential to emerge stronger and more resilient. However, failure to adapt to the changing market landscape could lead to a further decline in its fortunes. The world is watching to see if Nike can recapture its magic and reclaim its position as the undisputed leader in the global sportswear industry.